We're going to explore how a reverse mortgage can develop an instant retirement savings and if this is a good or bad idea. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. We're going to explore the reverse mortgage concept here and how this can develop an immediate retirement savings for the right folks. Now, to qualify for a reverse mortgage, you have to be 62 years of age or older. You need to have your house paid for or have a lot of equity built up into the house. And you can borrow against this equity and develop a tax-free income. Now, those people who get a reverse mortgage, this will help them supplement their income. It'll also help pay medical expenses, or it might even help with home improvements. So let's look at some of the requirements for reverse mortgage. Okay, some of the requirements for reverse mortgage. Again, you need to be at least 62 years of age, must live in the home as a primary residence, own your home free and clear or have at least 50% equity or more, must be able to pay your taxes, insurance, maintenance, homeowners fees, participate in reverse mortgage counseling. What can you do with the reverse mortgage? As we said earlier, so you can supplement your retirement income, cover the cost of needed home repairs, paying out-of-pocket medical expenses, eliminate or lower monthly mortgage payments. Let's take a look at what exactly is equity. If your home appraised value is $300,000 and you do not owe anything on the loan, your equity is $300,000. We're going to do a couple of scenarios here. One where there is no mortgage left, the house completely paid for, and the other example where there's a $100,000 mortgage or loan left on the property. So we need to know the age of the youngest title holder. In this case, it's 62, single family home, home value is $300,000, mortgage balance is 0, it's a primary residence, and the property location is 76001 zip code, which is Arlington, Texas. Of course, you would put your own zip code in a mortgage calculator like this. In this example, after you receive your reverse mortgage full lump sum, you would receive $130,000. Now let's look at the same home value, same age. In this case, we have a mortgage balance of $100,000. Your lump sum amount that you can borrow would be $30,000. What they're going to do in the previous example, same numbers, except there was no mortgage balance, you would have received $130,000. The first thing that the lender's going to do is pay off your loan. So they're going to take $100,000 of that $130,000 on the previous example and pay off this loan. That's going to give you an amount of $30,770 as a lump sum reverse mortgage loan. Now here's a case. We're going to change the age to 72 and there's no mortgage balance. That brings the lump sum amount of $146,484. So you can see here, the older that you are, the more money you're going to be able to qualify for. And of course, it's going to depend on how much equity you have in the house. Here's the situation, 72 years old, the home value is $400,000, the mortgage balance is paid off. You would qualify for $197,000. The next situation is, again, 72, home value of $500,000, no mortgage balance, and you would qualify for $248,000. That would give you an instant retirement savings that you could use. So what we've learned here is the older you are and the higher your home value is, the higher your lump sum is going. Let's take a look at the person that would most benefit from a reverse mortgage. A homeowner who can't financially afford to stay in their home, but they want to keep it. Again, they have to be 62 years or older. We mentioned lump sum payment, but you can also get your payment in monthly payments, or you can get it as a line of credit or a combination of payment. Now, is a reverse mortgage just free money that they give you? No, it's not. It's basically a loan against your equity, but there's also costs associated with it. How much does a reverse mortgage cost? There's various fees, origination fee, loan servicing fee, title fees, appraisal fees. So who makes money on a reverse mortgage? Of course, the lender is going to make some money. They're going to charge interest, and that interest is going to get built back into the loan that you borrowed from your home equity. What are some of the alternatives to a reverse mortgage? Downsize your lifestyle. Work past age 62 to develop more money. take in a renter, reduce your living expenses, ask family for assistance, or borrow against the equity through other means like a home equity loan or line of credit, for example. We gave an example here where a house was appraised at $300,000, there was no loan balance, and the reverse mortgage amount would be $146,484. In this case, there's no loan to pay off, so this would be a lump sum payment to you. Let's look at an example here where you pass away or you end up selling the house. Started off with a reverse mortgage loan of $146. Interest on the loan from the lender would grow the reverse mortgage loan balance. So now it's $250,000. So you pass away. The home appraised value is $400,000. We subtract the reverse mortgage loan balance of $250,000. So $150,000 in this case would go to your heirs as an inheritance. Let's look at an example where the heirs inherit the home upon your death. The appraised value is $300,000. The reverse mortgage had grown to $340,000 now. The reverse mortgage is higher than the appraised value of the house, primarily due to the interest and fees the lender charges. So when the heirs go to sell this, the lenders will get all the money. Now the heirs will not have to pay the difference. The lender will most likely file a claim for the unpaid balance with the insurer, almost always the FHA. Now what if you just decide to sell the house? You're going to downsize. You don't want to reverse mortgage. Let's say the home is worth $300,000. You have the house fully paid for. You sell the house for $300,000. Then you pay your realtor fees and various other fees. Let's say you end up with $280,000 cash after commissions and fees. So now you can move and rent or buy a new home. So we reviewed how the reverse mortgage works and how you can develop an instant retirement savings from a reverse mortgage. Keep in mind, certain people, this is going to be a great plan for. Others, it's not going to be. So you want to check it out, do the counseling, make sure it's the right thing for you. I want to thank you for watching. If you have any comments, leave a comment. Stay tuned for the next episode.